This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to The Commercial Investing Show, where we analyze, explain, and exploit the opportunities presented in today's commercial property marketplace. If you're interested in apartments, mobile home parks, self-storage facilities, and other income property, you've come to the right place. We'll explore what's hot and what's not in markets nationwide in the relentless pursuit of return on investment. Here's your host, Jason Hartman.
It's my pleasure to welcome back a returning guest. It's Richard C. Wilson. He is an expert in family offices. And today we are going to talk about the best practices of not millionaires, not multimillionaires, not decamillionaires, but centimillionaires. That means over $100 million and up. We can learn a lot from what the wealthy people are doing. What are their fears? What are their worries? What are they really optimistic and bullish about? Let's go ahead and kind of dive in and see what Richard says. Richard, welcome back. How are you?
I'm great. Thanks for having me, Jason.
Good. It's good to have you on. So, best practices of centimillionaires. That's a great catch line. Take us through some of those best practices.
First off, there's well over 25,000 centimillionaires that are kind of tracked globally, and the number is only growing. So I see this as an important topic because everyone loves to talk about billionaires, and that gets all the headlines, but no one ever talks about centimillionaires really, and there's many more of them that drive the economy. So a few of the best practices I wanted to get into were, one, a lot of them are creating single family offices and want to have a family office solution to help protect themselves and grow their wealth. That's obviously really central to the last interview that we did together. And then there's a number of business strategies that I found that these clients have kind of honed in and developed and have been key to them becoming worth $100 million plus. And so naturally, they want to use them even more and drive forward their wealth using those same strategies. If you want to, I could go into a couple of those kind of business approaches.
Oh, yeah, absolutely. Please dive in.
So first is just kind of a mindset of things being set up as a chessboard and not having a linear view of your business or your portfolio saying, well, we are in the event business, we offer events, or we are a consulting firm and we do consulting. Instead, they look at the business ecosystem and try to figure out how they can control or manipulate or be a part of multiple parts of it so that they might be able to reduce their costs or take the biggest bottleneck in their business and take it into a profit center, et cetera. So just the mindset of looking at your business in a really strategic way, or your portfolio of businesses in a really strategic way, is central to all of these other ideas. The second thing is that all of my clients are first-generation families. We work with over 20 different families that are worth $100 million or more. And these first-gen families are choosing to work. All of them could never work another day in their life if they wanted to. All of them outsource part of the management of their wealth, typically stocks and bonds or fund manager allocations, et cetera, to third parties. So, and if they wanted to, they could outsource everything and have all their wealth managed and live on a beach all day long. And when they get to that point of they're not working to pay a mortgage or not working for a retirement or to hit some really big number, they've already done that. They're really opting into working on things they either enjoy working on, they're excited to work on, and they have big strategic advantages of working on those things. They don't have to really do anything in their life. So I think that those two mindsets, approaching it like a chessboard and just being fully aware that these are families they're fully opted in to this is what we want to be doing with our time. Both, they're passionate about it, but also they probably believe that part of a good defense in their portfolio on top of diversification or conservative cash flowing assets for part of their portfolio is a good offense, and where they have a marked advantage against the competition, whether it is having the reputation of being a titan in their industry or a local big player in the local geography of a certain industry, or maybe having distribution or information advantages that others don't have. And that's how they're able to propel their wealth forward even more. So those are a couple of things that kind of set up just kind of the boundaries within their thinking.
So the first thing you talked about, I mean, it behooves everybody listening, if they have a business or with their own investment portfolio, look up and down the supply chain. Of course, look laterally and look around the playing field and see how things might fit into the bigger picture, of course. And that makes a lot of sense. You know, there's a great story about the brand Soft Soap. And when that company was launched, their real key, you know, maybe you've heard this, it might be kind of trite, but one of their real keys to success was that they went and captured a bottleneck. They captured the pumps. They ordered I think a 2-year contract from the supplier of those pumps, and they were the only one that had the pump. And so competitors coming into the soft soap business, if you will, couldn't do it because nobody made the pump. And so that was the bottleneck, and they captured it and kept competition out for a while. Definitely looking up and down the supply chain is a good idea. Now, Richard, I don't want to go much further without just asking you to quickly define family office. You know, people are starting to hear about this term, but I find it to be rather recent that people have been throwing that phrase around. Is that true or not? I mean, is it sort of a more contemporary term? You know, and define what it is for people, if you would. What it really is.
Family office is a holistic, full balance sheet wealth management solution. And that's the definition of it. It's supposed to be more holistic, more full balance sheet. Anything that touches your balance sheet personally, the family office hopefully is helping orchestrate or connect or protect the client. And so there's really only 2 types too. It doesn't get much more complex from there. There's a single family office, which means that, Jason, if you sold everything that you have equity in and it's worth $80 million or $200 million, you might set up a single family office.
I'm not quite that rich, but I'm working on it.
Not yet. Yeah. But if you did sell it, then you might say, you know what, instead of joining Goldman Sachs or UBS or going to a multifamily office, which I'll get to in a second, let's set up 10 full-time employees, and we're just going to execute on the things where I think I have a big marked advantage. And we'll outsource some parts for stocks and bonds and equities, et cetera. But let's control everything internally. And it's just going to be a team managing my wealth. That is a single family office. A multifamily office is going to a firm that looks like a wealth management firm, a traditional one, but has more multi-generational planning, more trust and estate and tax advisory work, hopefully a little bit more help on the direct investment side, and is going to be helping more on the hopefully accounting, reporting, back office parts as well. But if you just take a normal wealth management firm, just think of it as being more holistic, more full service, more comprehensive, then that is a multifamily office. And the reason that both exist, which is probably even more important than the definition, is that the wealthier you get, typically the busier you are, and the more people are pitching you things and coming after you, whether it's a IRS or government regulator or competitors or other people trying to get access to your calendar. So you get busier and busier, but as your net worth grows, one mistake is costlier and costlier. And there's so much complexity going on, you're more likely to make a mistake. So the ROI of just protecting yourself from reality of chaos going on around you can help pay for the cost of having a family office, and then just getting slightly better deal flow, making a wiser tax decision, making things run a bit more efficiently tax-wise and regulatory-wise, and reducing some chaos for you personally or perhaps some stress is really what produces a really big ROI for people that have a family office. Because a 1% mistake for someone worth $100 million, that could have paid for a few full-time professionals to just follow them around all day and make sure they don't make those types of 1% mistakes. Right. So it's a very simplified reason why you need to have a family office when you're worth a lot.
Right. Okay. Good stuff. So you started off with saying instead of going to Goldman Sachs, so are wealthy people finding that they want to have more control of their portfolios? They don't want to risk handing over, to some guy at Goldman. And then there's this huge conflict of interest always, because, where are all the clients' yachts, as the old saying goes, right? Is that one of the big motivators, just control alone?
For sure, control is a big motivator. I was on the phone today with a $1 billion family who I'm meeting with next week in New York, and they're setting up a family office from scratch. And they're just concerned that the people giving them advice are the ones who benefit from advising them to put all their assets with them.
Right.
So it's kind of like if you don't know which way to turn for, let's say, life insurance, and you say, who do I know that knows a lot about life insurance? Good chances are that person sells life insurance for a living And when you go to them, good chances are they're going to tell you should buy a lot of life insurance.
Right.
So people are afraid of that conflict, and they're afraid of getting taken advantage of, and they don't know what they don't know. And they do want more control. A lot of these families, they created all their wealth through control. The last natural thing they would do is say, okay, well, now I'm 58. I had an exit. Now I just want to give away all my money to a private banker who's going to be managing it. And I hope they don't mess it up for me and lose it all.
Right. Yeah, exactly. They created that wealth because they paid attention to it. Like Andrew Carnegie would say, put all your eggs in one basket and watch that basket. They were paying attention to it. So yeah, good stuff. Okay, let's go back to some of these best practices. Well, before you leave the family office thing, do you have to have a certain amount of net worth to have a family office?
Yes. I mean, typically to become a client of a multifamily office, some will take you in at 7. I mean, you start at 10 million net worth or liquid investments. And then, in the 10 to 30 million range, you're typically becoming a client of a multifamily office. Once you do get worth 25, 30 million, especially when you get worth 70, 100 million plus, you typically look at starting a single family office for yourself, even if a multifamily office or private bank, like a Goldman or UBS is helping manage part of it.
You keep saying multifamily office, and I'm not sure people know what that means. Do you mean for multiple families or multifamily properties? Just distinguish that if you would.
Yeah, so it doesn't have anything to do with multifamily properties, but multifamily offices are family offices that serve 5 clients, 10 clients, maybe 100 different clients. There's one multifamily office I know that only takes $100 million net worth clients, and they have about 30 clients. Some others have 200 clients, all worth 10 million each. And so,
but again, when you're doing that, you're really just back to the outsourcing and the control problem, aren't you? Or maybe not, because they don't sell anything. There's never a conflict of interest, probably, right?
Yeah, most of the time they don't sell anything, or if they do, they say our only area of expertise is self-storage. So if you ever want to access the self-storage, it's an option on the table. Everything else is third party, and we're not pushing you a product. We just charge you a flat fee, and it's not, we don't care which one you choose. It's just whatever's best for you. So some of them are conflicted, and they just try to wear it on the sleeve to kind of, show that they do have one thing that they do internally.
Yeah. Okay. All right. Okay. Go ahead with best practices of Centimillionaires.
So I think a couple of the most important points. I mean, one you kind of were hinting towards already about identifying a bottleneck. And we oftentimes refer to those, like Vern Harnish, he talks about choke points. And essentially what I found in my own business, and then I've found with many family offices, is that finding the most costly part of your business, or the thing which will be natural lead generation for your business, but it's a separate operating business in itself, can be some of the biggest sources of leverage, and they also can cost nothing. Sometimes these can be media assets. Like when we are starting the Family Office Club, we were able to acquire familyoffices.com for just $10,000, and we built it up into the most visited website on the industry. We used that to get a book deal with Wiley on family offices, and it led to our podcasts and LinkedIn groups, and it led to our events. And so each one I see as a choke point, kind of getting like a Jim Collins flywheel concept, just getting that to slowly turn over, and each choke point you can acquire turns over that flywheel another rotation, and just is more forward momentum. So what's most interesting to me is that as we were growing the Family Office Club, we had a platform model that had a couple different media aspects, choke point ideas worked into it, a couple different operating businesses in one platform. And I would get critiques sometimes of people saying, oh, you should just do one thing, or you should just focus on this one area. They didn't really understand why I had that added complexity. But what's really interesting is as I got more and more cold calls and cold reach outs from $100 million plus families, it was the centimillionaire patriarchs and the heads of the family themselves most who really loved talking about exactly what we're talking about right now. They love talking about choke points. They love talking about a platform strategy, or what the idea I'm going to talk about next. And so I've found that the most successful people don't approach the business in that straight head-on way. They do think strategically. I've never gotten a negative ROI out of spending some really concentrated time on choke points, and I've just found that to be a very common theme within the portfolios of the clients I work with. Another strategy I want to talk about is niche domination, or kind of a monopoly strategy. Rockefeller was a master at basically monopolizing his area through both using choke points, but also just being able to own a high percentage of the oil trade in his time. But another example is a family I know that bought a street sweeper company that had a lot of intellectual property on it. It's the most patent device on the market. And then they were able to buy a garbage truck manufacturing company as well that also had a lot of intellectual property on it. So they could do licensing and have other ways of getting the ROI on their investment. And now they have 2 of those high IP assets, and they're able to call on a single county, and they have both things to be selling them. And that investment has gone very well for them because their competition typically doesn't have multiple offerings, and they don't have all the intellectual property rights, which they can use to defend their turf and kind of expand how they accrue revenue in that business. So dominating a small niche area is a reoccurring theme that I've found. And it works so well that obviously there's antitrust laws that Amazon fights and that, Microsoft has fought in the past and AT&T got broken apart for.
Well, and then just yesterday or a couple of days ago, that was very much in the news again with AT&T, and they won the right to do that deal with Time Warner. Yeah.
Yeah, exactly. The reason why it's illegal on a mass level is because it works too well.
Yeah, right.
It breaks the game of capitalism because you destroy your competition.
Monopolies are great.
So, but in a small local market, in a small niche market, I'm not a lawyer, so no one should take any action based off any podcast they listen to without talking to a lawyer. But in certain small markets or in a small real estate geography, like a 4-block area that's near a downtown area that you think inevitably will be worth more in the future, or a new niche area in stem cells that, there's opportunities to monopolize a little niche and just nail that and be all over it. And I see families doing that and having done that. And if they do it in a rising tide, like Warren Buffett says, sometimes the tide matters more than the swimmer.
Yeah.
If you identify that right tide and apply choke points and a niche domination strategy, I find these things in combination just lead to a real superior force in the marketplace.
Okay, all right. That's probably a good segue into maybe another best practice of the Centimillionaires.
Another one that I found is that they like to be as close to the source of an investment as possible. So they would be the last person to want to invest in a deal or even hear about a deal where it was a broker who's part of a broker network, and then they heard there's a deal in this other location, and they're not tied to it closely. The Centimillionaires that I've worked with most often are trying to get direct to the source of the deal, because as the least layers of fees, they can manage the deal directly, add their strategic expertise. And so getting direct to the deal is a best practice, but then also directly to that, defining exactly what their strike zone is for a deal and getting as much of that specific type of deal flow as possible is really key to the most informed and most successful centimillionaire investors I know. So to contrast it, some people come into wealth, like the family that walked into our office 4 days ago. They're selling a business for $110 million. They have the contract in place. They're just waiting for it to close next month. And they said, well, we'd invest in just about anything. And it's kind of like graduating from college with a business degree and saying, like, I'd work in any area of business.
Yeah.
I'm open to it all. It's like, well, you might be today, but I can tell you for sure, 7 years from now, after 4 jobs or after 14 investments, there'll be areas that you do not want to ever invest in again. Or after a few meetings, you narrow it down. I try to help families go through that maturity without the pain of spreading their money out in a bunch of random things, because another way to say it is each investment you make is going to bear strategic fruits. And if you don't have a strike zone defined that's based on your DNA, what you're passionate about, what you can make a lot of money at, and if it's not highly intentional of who you're taking meetings with and what types of deals you'll consider, you're not going to be having the synergies come out on the other side.
Right. Yeah, absolutely. I totally agree. I get these calls from these hokey people all the time that are like, well, I'm like the 17th person removed from a deal that I want to tell you about. I got this hot deal, and that just doesn't have a lot of credibility to me. And you shouldn't waste your time chasing those kind of deals. Everybody's got some deal like that, but it doesn't mean it's any good.
Right. Or that it's real.
Yeah. Or that it's real at all. That especially happened in the REO market, real estate owned by banks years ago during the Great Recessions. You'd get these people that really have no connection to the deal at all. They're just someone that knows someone that knows someone that knows someone. It's like 26 steps down the line, and they're trying to, market this tape of properties to you. It's just absurd. I mean, these guys are just the hokiest thing ever, Yeah.
It's comically absurd.
Yeah.
I've gotten so many of those emails in the past, and having a really well-defined strike zone is just good for everybody, because then people know what type of deal flow to send you. You can say, well, our strike zone's right on our website, so of course I'm going to say no to that pitch. And you can tell yourself that internally, tell your team, or tell the person in person at the event that you're at, or the email you get. You can just point them to that strike zone checklist. Right. And many people start out saying, oh yeah, consumer product businesses, that's our focus.
Yeah.
But there's 20 niches in there. And do you mean U.S. or non-U.S., control, non-control, right. debt, equity? It's, if you don't have a dozen things on your checklist, then you are wasting a lot of energy, or you just have to realize we're on a learning curve here. And, for the next 18 months, we're learning, and we shouldn't say yes, or we should be very careful.
Yeah, right. Okay. All right. What else?
I think the one that ties together a lot of these ideas, and it's the number one thing that I start with any client that we help form a single family office for, is that they need to have a dashboard and really a compass of where they want to go documented. So essentially, if you don't know your family's values, missions, objectives, the reality you want to create in terms of level of chaos and control and transparency, then you don't know what your direct investment strike zone should be. You don't know what your portfolio should be. You don't know if you should hire your sister or hire Goldman Sachs or hire a multifamily office or start your own. So the most important thing is to be highly intentional about exactly what you're trying to do and why. After you have that one page, and we try to fit it strictly onto a single page, then we help create the rest of a dashboard that really documents what real estate assets they have, what assets they're looking for, and what's the deal flow they're looking at. They might be considering 12 deals at a time, and if they don't have it on a dashboard, they might forget about a deal that they looked at a teaser at where they're in a data room for 2 other deals, and they might have had lunch on a few other deals, and it's hard to talk about it as a cohesive team if you're not just a one-man band, type family office. You need to be communicating what deals are on the radar and why, and how those fit into the mission and values and objectives. Yeah. And so a lot of families just have that up in their head, or they might have a spreadsheet for deals they've invested in, or some $200,000 a year fancy software reporting solution that somebody sold them. But a lot of families do not have just a 4 to 7 page basic dashboard. It's basically a map of where they want to go. And then the other pieces of it are kind of plotting the course in the different parts of their portfolio, including a page managing service providers and what needs to iterate next in the family office to move things forward. And so the most successful centimillionaires I know, they have to be on top of all of that. I wouldn't say a lot of them have that documented, but it's like basically it doesn't cost anything. It's not rocket science. It's just a mindset of reducing chaos and, having the basics and fundamentals
makes
written
sense.
down.
Makes sense. Absolutely. Okay, good. Well, just wrap it up for us. Maybe if you want to share one more principle, I know we got to get wrapping up here, or just any other thoughts to kind of put this in a box for us.
Sure. I think the last principle I'd like to leave with is that after 11 years of running the Family Office Club, I think that the most important thing I've found from working with clients and running our own team is integrity, and not just moral integrity, which is alignment of your values with just kind of good morals, but really integrity in terms of everything in your business, in your portfolio, on your team, how you talk, how you interact with others, your branding, the clothes you wear, where you live, products you offer, all of those things being all integrated, I think is the most important thing to be focusing on, whether you are worth $1 million or 30 million or $1 billion. That goes for within a business as well as in your personal life, because when it's not, then something is in conflict and you're just fighting yourself and you're dragging an anchor behind you. And I love this concept because I apply it to myself, my clients, our events, our company overall. And I just find that it's really helpful in making sure that the clients we engage with are also aligned with where we're going and who we can serve best. And so just keeping integrity centered and central in everything we do, and encouraging our family office clients to do so as well, I think just removes a lot of stress and chaos and lost capital for people who are investing and who don't kind of stick to their principles.
Absolutely. I think that's very good advice. Richard, give out your website.
It's just simply familyoffices.com. And we've got a free book on there for family offices if anyone wants to learn the basics.
All right. Thank you so much for joining us again. It was good talking with you.
Great. Thank you, Jason.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.